Welcome back. Walmart shares have rallied nearly 13% over the past month, and today, Morgan Stanley upgraded the retail giant to an overweight. Analysts also raising the price target to 110. Call the day, Pete.
Well, when I look at this name, now that it's gotten to where it's been, I feel like this is too late. And I think when you look at the stock, Scott, if you go back and you looked at the stock around the middle 80s, where it was, maybe even under 90, you'd look at that stock and say, you know what, there's some nice upside here. The problem I have right now is you start looking at the actual valuations and you want to compare them around and look at somebody, Walmart versus Target, and see whose margins are doing what and all those kinds of things. Target is a better buy. Now, I think Walmart was a great opportunity at 85 or 88. I think now all of a sudden it's getting close to 100. I think this is a very late call by the Morgan Stanley analyst.
So you take Target over Walmart. Joe, you own Walmart.
Yeah, I'm going to stay with it. Yeah, I mean, listen, Pete and I for years have had this debate about Walmart versus Target. There's times he's been right. There's other times it looks like Walmart is grabbing the lead. I think this is one of those times right now. What are you humming for? Are you a bird? Are you singing? What are you doing?
You're always right. You're always right. I just disagree with you.
You're always right. Spike the football in the end zone. Anyway, $98 for Walmart. I think when you're looking at a portfolio, I'm not getting angry. I acknowledge he's always right.
Nice debate.
Look at it from a portfolio.
Don't be afraid.
Look at it from a portfolio standpoint.
I'm offended by this.
Not from a standpoint of, okay, let's pick a stock. It's at 98. I think it's going to 105. I think it works well in a portfolio when you're looking at the exposure to the U.S. consumer, when you're looking, as rightfully is noted in this report, where you're not going to see contraction in the margins. They've already gone through that spending pain over the last couple of years. They're finally now having come to fruition the Jet.com purchase. So I like the fact from a defensive portfolio standpoint that I could include it in here. I'm happy looking at it at 98. Okay, 110 price target. Pete's probably right. That's probably a little bit rich to get to there. But it works well in the environment in which we are right now where the consumer is challenged, but yet the best consumer is the U.S. consumer, and I like what they've done with the margins.
I mean, in terms of off the 52-week high, Target's off more than 20%.
It is, absolutely. And that created the great opportunity. Target got absolutely slammed on one thing. When everybody came out with holiday sales, and theirs were fantastic, by the way, they got swept down with everybody else. I think sooner or later that's going to catch up. If you ask me right now, which one would you rather? Let me tell you, if Target were trading at 85 right now and all of a sudden you see Walmart at 85, I'd be pretty interested in Walmart. Problem is, I see Walmart's already made this move towards 98, so why wouldn't I go with the less expensive one, the one that just gave you some numbers that are absolutely
goes to
screaming.
110 or even higher than that? What's the big deal?
See, we're making a mistake. Again, we're going back to Walmart versus Target. Both of these can work. If you're looking at PEs, Walmart is 20. What's Target? 13, 12, somewhere around there.
And that's part of the reason as well. That's part of the reasons why I select one over the other. From a PE perspective,
if you're looking at Target versus Walmart, yeah, okay, it makes sense. But let's not make this about Walmart versus Target, because over the last 5 years, historically, both these names have proven that they can work in a portfolio view. I just believe right now, Walmart's going to work better in the portfolio because they've taken the margin pain.
I think, though, to Joe's point, that was so interesting about Walmart is, Walmart's really been able to balance keeping their core consumers, bringing in Target consumers because they're apparel and they've really upgraded a lot of their stores. And then they've also done a really good job at competing at the Amazon level. And then, we'll see with what happens with, Flipkart in India, which ultimately they have to execute on because they paid a lot of money. But I do think, Walmart's a really good example. Sears would be the opposite of an old guard company that's been able to, continue to evolve with technology, continue to evolve with their brand. And so long term, I think it's a really solid company to own.
Scott, can you show that chart again? I'm sorry. The chart you just had from 14 to 18, the returns on both of them.
Amazon was up 21%. It's on your left-hand side.
Right. I mean, so if both of these can work. Okay, Walmart's up 30% in the last 5 years. Target's up 19%, and they've both evolved as a business model. To Bryn's point, Flipkart, that's a tremendous acquisition that gives you the emerging market exposure.
But you would go Amazon. Are you saying you'd go Amazon over any of these?
I own some retailers. They're auto parts retailers like Genuine Parts. I think they're doing a great job.
Advanced Auto Parts.
AutoZone. In addition to that, we own some Costco. I don't think we have any Walmart left or Target. Not a core competency of ours. We only do what we know well and do that poorly.